You've watched SpaceX dominate headlines with every launch, seen the space economy explode into a multi-hundred-billion-dollar market, and you're wondering if you missed the boat on space investing. Here's what most people don't realize: thinking SpaceX is the only game-changing space company isn't wrong, it's just catastrophically incomplete. I've spent years analyzing what separates the next big winners from the also-rans in emerging markets, and one pattern keeps showing up: the companies that win aren't always the first movers, they're the ones that find a different angle on the same massive opportunity. That's exactly what caught my attention about Rocket Lab. While everyone obsesses over SpaceX's massive Falcon Heavy launches, Rocket Lab has been quietly building something different: the go-to platform for small satellite launches. The stock trades at $81 today, down from its 52-week high of $151, which immediately tells me a story about hype cycles and reality checks. But here's what the price action doesn't tell you about the underlying business opportunity. Here's the thesis that has growth investors excited: while SpaceX focuses on massive payloads and Mars missions, Rocket Lab owns the small satellite market, and that market is exploding. Think about it: every company from agriculture to logistics to telecommunications needs small satellites for data, and they need dedicated launches, not rideshare programs where they wait months for the right SpaceX mission. Rocket Lab's Electron rocket is purpose-built for this exact mission. They've completed dozens of successful launches, they're building their own satellites, and they're creating an end-to-end space services company. The addressable market for small satellite launches is projected to grow exponentially, and Rocket Lab is positioned as the category leader. That's a compelling growth story, but there's a darker side to this equation. Here's where I get concerned: space is notoriously difficult, capital-intensive, and unforgiving of mistakes. One failed launch can set you back months and destroy customer confidence. Rocket Lab is still scaling operations, burning cash to build manufacturing capacity, and facing increasing competition from both established players and well-funded startups. The stock's journey from $37 to $151 and back down to $81 tells you everything about how volatile investor sentiment can be when a company is still proving its business model. Plus, there's always the SpaceX risk: if Elon decides small satellites are worth his attention, he has the resources to dominate that market too. The question isn't whether Rocket Lab has a good strategy, it's whether they can execute faster than competitors can catch up. Here's what's interesting: the institutional tracking data for RKLB is still thin, which tells me this is either too early stage for big money or they're keeping their positions under the radar. What I am watching is the company's ability to hit operational milestones, launch cadence, customer acquisition, and the path to profitability. The smart money won't pile in until they see consistent execution and a clear timeline to positive cash flow. That creates an opportunity for individual investors who can move faster than institutions, but it also means you're taking on more risk. The recent pullback from $151 to $81 might be creating a better entry point, or it might be the market pricing in real concerns about the business model. Looking at the price action, RKLB has given us a masterclass in growth stock volatility. The run from $37 to $151 was classic momentum, probably driven by space industry hype and a few successful launches. The pullback to current levels around $81 suggests either profit-taking or genuine concerns about valuation and execution. What I'm watching is whether this level holds as support or if we see another leg down toward that $37 base. The 1-month decline of 2% is actually relatively modest compared to the overall range, which suggests the stock might be finding some stability. But in growth stocks like this, technical levels matter less than fundamental progress. Here's how I'm thinking about the risk-reward. The bull case depends on Rocket Lab executing flawlessly while the market for small satellites grows as projected. The bear case is that space is harder than it looks, competition intensifies, and the company burns through cash before reaching profitability. What would make me more bullish? consistent launch cadence, major customer wins, and clear progress toward profitability. What would make me bearish? Launch failures, customer defections, or SpaceX entering their market aggressively. This isn't a stock you buy and forget, it requires active monitoring of operational metrics and competitive dynamics. But that's exactly why it might offer asymmetric upside for investors willing to do the homework. Look, I can't tell you whether RKLB is the next SpaceX, that depends on execution, market dynamics, and factors none of us can predict. What I can tell you is this: the space economy is real, the small satellite opportunity is massive, and Rocket Lab has positioned itself as a category leader in a growing market. Whether that translates to stock returns depends on your risk tolerance and belief in the management team's ability to execute. If you want the full data breakdown, technical analysis, and ongoing monitoring tools, check out nexusaicalls.com. And remember, this is analysis and education, not financial advice. Always do your own research and never invest more than you can afford to lose.